Welcome to the Confident Host podcast with me, Kay Gibbs. If you're a holiday let host or co-host looking for more bookings, more efficiencies, and to get ahead, then you are in the right place. Each episode brings you practical tips, real stories, and expert advice. On today's podcast, I'm welcoming back our first returning guest, Helen from Mapletree Accounting. She's here to talk all about making tax digital. She's going to break it all down, make sure we understand what we need to do and when we need to do it. And I found this really educational. So let's get started. I am absolutely delighted to welcome back our very first returning guest, Helen, to the podcast. And she's here today to talk tax again, of course. But this time we are going to very much focus on making tax digital, MTD, which is the flavour of the month, isn't it? Everyone's favourite subject at the moment. So we've got lots of questions to go through, some basics to know whether it applies to us or not. And as ever, Helen is the expert on this. So before we get stuck in, obviously we need to know what you're drinking. Now, this is controversial, folks. Sit down for this one. I am not drinking a chamomile tea today. I've got a hot chocolate. It's a rarity, but I've got a hot chocolate. Helen, what are you drinking?
I've just got a glass of water at the moment because I was a bit late to our meeting and the kettle hadn't boiled. So I just grabbed a glass of water. But that mug you've got there is beautiful.
Oh, I love my mugs. Yeah. And hot chocolate is sort of purple in my head, so it works with the irises. So Helen, if you've not listened to Helen chat with me before, you've not come across her, you need to know a little bit about Helen and her business. So tell all.
I'm Helen Scurr and I own Mapletree Tax and Accounting Services. We've been in business for about 13 years and our specialism is furnished holiday lets. And I am a furnished holiday let owner myself.
Ah, that helps with the specialism.
It does. And it's just brilliant being sort of part of your community, Kay.
Oh, thank you. So we've spoken before, and I'll just say this so that if this is your first listen, Helen and I have spoken before about capital allowances at length. We've spoken about lots of different questions around tax and to do with fees and to do with all sorts of things. So we've got another podcast that is a kind of general touch all basis. But this one today, we are heavily focused on making tax digital, which obviously is pertinent. We are recording this. What's the date today? On the 2nd of April, 2026. And we know by the time you listen to this, making tax digital will be underway, but you will certainly have some decisions still to make if you haven't made them already and some actions to take. So Helen's going to kind of talk us through that. Before we start, Helen, I sort of said to you before we started recording that I'm picking up from hosts and from business owners more generally outside of our particular sphere, anxiety and frustration about making tax digital. And I can't quite get my head around why, because to me, it seems like progress. Tell me why you think that kind of anxiousness comes from.
It is a positive thing. It's something that will be helpful for us. But it's change and no one likes change. And there's things that have to be done to sort of get the change working. You've got to register it. You've got to keep your records in a different way. And I think there's a slight suspicion that, the government are wanting to know everything every few months.
Yeah.
Maybe they're going to want to charge tax every few months. Where's it going? So there's a little bit of suspicion, but really, it's to help everyone keep more accurate records. And also it will mean your admin is spread out throughout the year. So you haven't got that mad panic before the January deadline. You should know how your business is doing in real time, which is all business owners. It's really important to know, are we doing well? Should we be putting our prices up? Should we be trying to reduce our costs? This will help everyone with that.
Yeah, it's easy to not prioritise that kind of financial review if you think, oh, well, I'll just get to it next year all the time. But actually doing it quarterly should help us keep track of it. I was just talking to you about my bookkeeping, and I think there'll be a lot less lost expense claims because of this, because you're bringing it forward to doing it all the time. And if you're using software to record, I've purchased this thing today, I'm screenshotting the receipt, here I go, that accuracy is likely to be a positive, isn't it, for lots of people?
Yes, I don't know the amount of money that's probably lost in expenses that could have been claimed, but people have just lost their receipts. Probably a lot. So you should be paying less tax because you're keeping your expenses.
Yeah, I suppose there will be, for most people, an increased administrative and accounting cost because your accountant's going to need to touch base with your accounts more times through the year, right? Can you just tell us about that and how it's going to work, the logistics?
So you can still do this yourself. You don't absolutely have to have an accountant to do it. There is the software out there. You should be able to do it all yourself if you want to, but lots of people will want the reassurance of an accountant reviewing everything 4 times a year and preparing their final tax return. In the long run, what should happen is most of the work will be done during those 4 quarters. So the end of year tax return will be much quicker and easier. So although the costs probably will go up a bit because the accountant's got to go in 4 times a year and to do the final return, it shouldn't go up that much because the end piece of work should be much smaller.
Yeah, sure. I see. And so we can do that ourselves. And so from an admin point of view, it's about assigning that time. And I suppose as a small business owner, I'm thinking, okay, well, a quarterly review of where I'm at, what my expenses have been, what my income's been is a good idea anyway. So I'm just going to kind of use it for dual purpose, I think.
Hello, folks. It's just me coming on to interrupt me and tell you about Confident Host Circle. It's my subscription group, a membership for hosts just like you who are looking to take what can be something of a lonely sport and bring community to it. Inside, you'll find community, training, inspiration and support to feel confident in your hosting and in your business. Each month we enjoy a theme where there will be training, both things that are quick fixes and also bigger, more strategic ways of building efficiencies into your business and just getting more bookings. Confident Host Circle is all inside a private Facebook group where there's a really lovely community of like-minded hosts, as well as the training and the chance to chat and ask questions and so on. We have a monthly live where we either meet up together or you guys get the chance to ask me anything. At its heart, it's about consistency, community and confidence. And I would love to see you there. You can find out more at www.kgibbs.com/confident host.
There's also been talk that it means we'll be needing to pay tax sooner, but that's not necessarily true, is it?
No, there's no plans at the moment for paying tax sooner. As at the moment, once you make more than £1,000 of tax to pay anyway, you have to go on to payments on account. So you're paying half of your next year's tax in January and half in July anyway.
Yeah.
So there's nothing's been suggested at the moment that will change how you pay tax.
Okay, that's brilliant. Right, so I think the first question to really get stuck into then is, who does it apply to?
Okay, so this applies to landlords and sole traders who in their 24-25 tax return, that's the one you submitted by last January, had, if they add together their property income and their sole trade income, if that was more than £50,000, they're in from this April. That's
okay. So that you will need to be underway or about to get underway when you listen to this podcast then, if that's you. Now, there was a thing came up fairly recently, a few weeks ago, when Airbnb made some changes with their service fees. I shared that information and there was lots of talk, particularly about thresholds and VAT threshold being a reason why that shift for Airbnb was problematic for that group of people for whom, you know, they were riding close to that tax threshold. Makes complete sense. But people also raised with me that they might be pushed then into the making tax digital threshold. But my feeling, and I'd love you to correct me on this if I'm wrong, is that it looks to me like the intent is that we will pretty much all be under making tax digital. All sole traders and landlords will be under making tax digital in the coming years. So it's merely a case of bringing that forward, probably. Can you fact check me on that?
Absolutely correct. It's 50,000 this year. Next year it's going down to 30,000, and then the year after that it's going down to 20,000, and it's anticipated that it will go as low as 10,000. I've not heard anyone say it will go below 10,000, but within a few years, potentially everyone who has turnover of more than 10,000 will be in it.
Yeah. So really, that additional fee that will be brought into counting as our income is unlikely to make any substantive difference. It may bring you forward. If it tips you across one of those, it may bring you forward by a year. But in the end, we're all going to, anyone.
It's only going to affect it probably by a year. And actually, you once you're in, I think you'll think, actually, why was I worried about this? I think sometimes the worry of something is far worse than the actual reality, isn't it? And when you've done it, you just
definitely
think, getting it out of the way, getting all your systems set up so that you're keeping digital records. It's probably actually, you'll probably be happier because you haven't got the worry of it.
Yeah, I think that's so true. I said at the beginning, what are people worried about? But you're so right. Sometimes with these things, it's not really worrying about anything in particular. It's just thinking, oh goodness, I've got to learn something. I don't have capacity in my life to learn something, which I completely empathise with. Would you say then, can we opt in if it's not yet necessary? Say someone's projecting that they will need to come under it in a year's time or in 2 years' time or whatever. Would you say, yeah, go in for it early if you've currently got capacity to learn it or you've currently got capacity to get things set up? Is there any harm in going in early?
So I've been in the pilot for the last year, so I volunteered to go in early just because I wanted to know how it works.
Yeah, bro.
And I have to say, it's not been difficult at all. It's been really straightforward, and I've actually submitted different submissions under different software just to try different things out.
Yeah, love that.
Some of the ones I wanted to do I wasn't able to do because I hadn't actually written the software in time, but I've tried different things at doing it. So yes, if you want to go in early, I would say it's worked for me because obviously I'm working in this.
Yeah.
very
But
right
there's no
average.
downside. There's no.
It hasn't been a downside for me at all.
No, and to be, I just want to say this out loud. You're not going to end up paying more tax. That's not the thing. It's just about reporting. It's not actually a regime change in terms of amounts of tax due.
And you'll know earlier how much tax you'll have to
Yeah.
pay.
My projection is that people will pay a teeny bit less tax because I think they'll report their expenses more accurately. That's my best guess. And like you say, knowing what you're going to need to pay sooner, so you can set it aside, and it'll probably just force people to just look more carefully at the figures. Okay, so you've given us some of the timescales there. Talk to us about what's included in that amount. Are we talking turnover? Or are we talking profit? What income streams matter?
So it's turnover. So as you said before, you've got to be very careful that you are including your gross turnover. So you're not just including your income as the net amount after Airbnb or Booking.com have taken off their fees. You've got to include what the guest is actually paying.
That would be the same. I just think this is worth saying. If you sell things on Etsy, that's the same. They're taking fees, but that is part of your turnover. That's part of your gross. eBay work the same as Airbnb. It's not, I think sometimes we're a bit woe is me about the Airbnb thing, but it's any fees, any website fees, any card fees, all of that stuff. We need to be declaring what our turnover is prior to that. We're going to come on in a bit to software that is best at enabling us to do that, but we'll come back to that. Okay, so turnover, not profit. And what income streams are we counting?
So you're looking at your property income, and if you're a sole trader, if you're self-employed that's not working through a company but you've actually got sole trade income, it's those two added together that you need to look at. If you're in a partnership, that doesn't come into it, so you can discount that. If you're employed in a job, that doesn't come into it, so discount that. It is purely, and if you've got investment income like dividends, bank interest, don't look at that. It is your self-employed income and your property income that you need to consider.
Okay, so that's who needs to think about this and needs to be included. And what do they need to know? Tell us the facts about it.
So under the new rules, you need to make 4 quarterly submissions to HMRC every year, followed by what this has sort of different names that you might have seen it called the final declaration, the final submission, or the MTD tax return. And it's all a bit confusing because at one point they were talking about doing 6, so 4 quarters plus a final one plus the tax return. They've got rid of that 5th one. So it is 4 quarters plus your tax return. Each of the quarters, you are reporting to HMRC what your income has been and what your expenses have been for that quarter. It's on a cumulative basis. So the second quarter, you don't just put what's been in that quarter, you include what's been in the quarter before. I think that way actually makes it, if there's a mistake made, that's easier because you haven't got to go back and correct the first quarter. You just restate the figures.
I see. You're updating the figures rather than you're not. I'm using my hands now, listener. You're not doing here's this quarter as separate entities. You're going here's this quarter and here's this half. Can I call 2 quarters a half? And here's this 3 quarters, like that. It's extending that.
I think you're just the way this was the income for the first 3 months, and now we're halfway through the year. This is what
got it.
So you're just adding to it.
So there's something there you just said, Helen, that to you might seem unimportant, but I just want to highlight. You just said, so if you make a mistake, you can just update it here. And I just think that is so important when we're talking about tax reporting. If you're coming to something with good intent, you know the law, you know what you're intending to do, and you accidentally slip on the keyboard and put in a 5 instead of a 6, that's not the end of the world. You can come back and, make adjustments. I think that's really...
I mean, it's meant to be correct, and you're submitting it as correct, but mistakes can happen. It's like tax returns. You can amend your tax return if you realise you've forgotten some income.
Yeah, and I didn't know that until I met you, when we had our first conversations about this over a year ago, when we were talking about the capital allowances for people going back and claiming from purchases and claiming from work they've had done and so on. You can still now go back and make adjustments to the relevant tax year. And I had no idea about that. So I just think that's worth highlighting, because I feel, as someone who I was employed for most of my life and now I'm self-employed, I find the whole, what if I make a mistake thing utterly terrifying. But that doesn't have to be the end of the world. You can go and make corrections.
You're not meant to submit estimates. They are meant to be correct.
Yeah.
But if there is a mistake,
but mistakes can happen, and
it can happen, and they can be resolved.
They can be solved. Yeah, I think that's the thing. Don't be kind of scared to admit you've made a mistake if you realise you've made one. Okay, sorry, I interrupted you there.
So we talk about the 4 quarterly submissions, and then and so the dates for those. So the first quarter runs from the 6th of April to the 5th of July. And then you have just over a month, because you have till the 7th of August to actually submit a submission for that quarter.
I see. Yeah.
And then the next one runs from the 6th of July to the 5th of October. And then you've got to the 7th of November and so on. So the final quarter, which takes you round to the end of the year at the 5th of April, that one doesn't have to be submitted until the 7th of May.
Yeah. So if you're listening to this, I think we're releasing this at the beginning of May. If you're listening to this and you're thinking, oh, pants, I haven't sorted this yet, that's okay, because your first one is going to be due
7th of August.
7th of August, okay. But for the period up until the 6th of July.
5th of July, yes.
5th of July, thank you. But where you do need to get on with it is you need these records to be kept digitally, don't you? The whole thing is called Making Tax Digital. So tell us a bit about the digitalisation and how that works.
So how they're meant to be is that each transaction, each sort of item of income and each item of expenditure is supposed to be kept separately on a digital record. So there is lots of software out there, such as Xero is one of the market leaders. And there's some other ones which you can get free with bank accounts, like Free Agent. And you mentioned you've got a new Tide bank account recently, and that's got some software that is also MTD compatible, and there are various other ones. So you can use this sort of software to keep all your records. But also, and I think some people don't realise this because some of the big software companies are kind of giving the impression that you can't do this anymore, you can still use spreadsheets.
Okay. And how would you then submit if you have got it on a spreadsheet? How do you get that to HMRC?
There is extra software called bridging software that will link your spreadsheet to HMRC. So you would need to subscribe or buy the bridging software to do that link.
But if you've kept your records meticulously on a spreadsheet, you're listening to this in June and you're thinking, oh goodness, I haven't done this yet. You actually aren't behind at all if you've got it all on a spreadsheet. You can get bridging software, submit it that way, no problem.
Yeah, completely.
That's great news. Out of interest then, because you've tried lots of the different software options available, would you recommend to people? So, we all know the kind of scale of business we're talking about, the scale of transactions there's likely to be. Do you feel that options like Xero or Free Agent or these kinds of things, do they offer time saving that makes up for their cost? What would you personally recommend?
I think it really depends on the number of transactions you've got going through your business. And if you've got more than one property, I would definitely say use some sort of software.
And that's because you can label and tag things in there, right?
And you've just got such a volume of transactions. It just keeps it so much more organized. And spreadsheets, with the best of intentions, you can overtype or you can delete cells or you can mark things up or things get dragged around. Bookkeeping software, I think, is the sort of gold standard of keeping your...
As many listeners will know, I've recently, with Helen's support as my accountant, started a limited company like a real grown-up. It's very exciting. So I started a few days ago using my new Tide account. And something that I just thought, oh my goodness, this is going to change my life, is that I could just screenshot the receipt on my phone and add it to that transaction for each thing. So no more will I need, this is in this email, or I've printed this off, but I've run out of printer ink, or that's stashed in this package over here. Even if it's something from the post office or something I need physically, I can take a photo of it and just add that onto the transaction. And that for me that's wonderful. Anyone who's using this software, do we need a backup? Once I've submitted that and put that on there, can I delete that from my phone and put it in my bin? Wow. that is life-changing. I'm so excited. If this software is reliable, I mean, that's amazing. So I definitely am enjoying so far having that software. So if that's something, if the advances in this software have happened because partly of Making Tax Digital, that seems like a real positive to me, because it just makes it easier to run a small business, I think, or to run as a sole trader.
I think it does. And you could generate a report very quickly to see how you're doing. We'll get all sorts of information. If you want to just run off how much am I spending on cleaning products, how much am I it's just much quicker to do it on software, and you can compare, put this property to that property if you've got it correctly. But I don't want to talk down spreadsheets for smaller businesses and people who, I know, we're all very cost conscious and it is a tough time for the industry. If you've just got one property and your costs are quite simple and straightforward, don't think I need to get software, carry on using a spreadsheet, because that will be cheaper probably.
Have you experimented with a bridging software that you would recommend?
There are various ones I've used. Some of them are industry specific, so the licenses are quite expensive. So one called PTP, which is quite good.
From the sound you're making, Helen, I'd say you found they're all much of a muchness in terms of you haven't found one that's absolutely dreadful and they're going to do the job. They're going to bridge and Yeah.
Yes.
Okay. So we
I mean,
shouldn't worry.
there might be ones out there that don't work, but all the ones I've used have
Yeah.
worked.
Well,
Yeah,
that's
they've all had slightly different ways of doing it. Some easier than others, and different price tags attached as well.
yeah. Okay. So that's the facts. That's what it looks like. And there's a slight complication just for this first year, or indeed for whenever your first year happens, if that's going to be for you next year or the following year, in that you've got a bit of a hangover from the old system and the new system. Just explain that for us.
So the first year that you go into making tax digital, so say you've just breached your £50,000 in your last tax return, so you're in it now, and you start keeping your digital records, and you've got to do your first submission by the 7th of August. But don't forget, you've still got to do your 25-26 tax return. So while you're getting to grips with this new system and doing your quarterly submissions, you've still got last year's tax return to get all your figures together and get your tax return in for that. So I think people just need to not think, oh, I'm doing it all digitally now, and forget about
forget a whole year. I feel like there's never been a time where that intention we all have to do our tax returns in April is more valid than now, because if you're that person, and because you could end up doing your quarterly reports in, doing them in August and doing them twice more, and then going, oh, actually I haven't done the one for the whole year before, and I've forgotten completely what all of these figures I wrote down meant.
I'm going to drop you in it now, Kay, because Kay's just told me she's going to do her tax return next week. So by the time this goes out, I want everyone to challenge Kay to see whether she's actually done it and submitted it.
Go on then. You've held me to account there. And yeah, it's true, listener. That is what I've said. And actually mine's for a similar reason. So as you know, I've just started a limited company, and what I don't want to do is be thinking about what I was, my sole trade before alongside my limited company. I want to kind of finish it, put that away, do my tax return that includes that, and then I want to start afresh. Obviously I'll still have my own personal self-assessment to do, but for what the business is going to pay me. But yeah, I want a fresh start. In fact, that's exactly why I'm doing it. I want to get it cleared up so I can put it away. So yeah, we'll see if I'm as smug when people listen to this and say to me, Kate, did you? I hope I will have done. Yeah, the intent is there. The intent is there. Okay, you spoke to me, and Helen, something I love about our conversations is that I always come away from them, whether they're our podcast ones or our private ones, always come away with them with something new, something that I didn't understand. Okay, thank you. So then there's people in very particular circumstances. Let's say their finances have changed a lot in the last few months, or perhaps they're in partnerships, or tell us about some of the people that would be thinking, hang on, I still don't know if this applies to me.
So if you've just started your business, say you started in 24-25 and you made £30,000, or you had to take your income was £30,000, but you only started halfway through that year, HMRC will annualise that, and they'll expect you to consider that on an annual basis. So actually, if you made £30,000 in 6 months, you actually would have made £60,000 over the year.
Okay.
So you're in. So
you sort of project what that would look like over a whole 12 months. Okay.
If you started your business years ago and you made you had income, I'm doing it now, income of £60,000 in that year to 24-25, but you're expecting that to drop for some reason, and it would go down to, I don't know, £20,000. So you're thinking, okay, my income next year is only going to be £20,000. Am I in or am I out? You're still in, because your income from the 24-25 tax year was over the £50,000.
Yeah,
you're in, and then you have to stay in for 3 years. So
okay,
you're in. The only circumstances like that where you wouldn't be in is if your income stopped completely. But then you do need to let HMRC know that that's the case, because they'll expect you to go in.
Okay, I don't know that we've said this explicitly, that the onus is absolutely on us, on people as sole traders and property owners, to do the reporting, but you've just said HMRC will expect. So do you guess, and I appreciate this will be a guess, that there will be some sort of checking of, look, their sole trader income appeared to be this, why have they not done that further down the line? Is that
I mean, they have over the last few weeks been writing to people. So some people will have received their letters saying you need to register for it.
I've certainly had prompts saying check if you need to, check if you need to. I've had quite a few of those.
So some people have actually had letters saying you need to register. I think if you've got one of those prompt, yes, do your check, see if you need to. If you've got a letter saying you're definitely in, register. For joint property owners, you need to just consider your share of the income when you're looking at qualifying income. So if you've got a property that it's had income of £60,000, but you own it with your partner, it's only your £30,000, so that wouldn't put you into it in the first instance. And then when you're doing your reporting, each taxpayer has to do their own report. So you would just report, if you're in it, you just report your share of the income.
Okay, that brings a question to me then, because we were talking earlier about this snazzy software that can track all of the ins and outs, and you can assign things to. There's two things I can think about here. If you're in a partnership and you've got one a joint account where that's going on, that's not going to accurately reflect what you need to report on to HMRC.
But I'm also there, because if you're in a partnership, an official partnership, you do not come under, it doesn't come under Making Tax Digital.
Okay.
You've got a registered partnership with HMRC.
I see.
That might be in it anyway. But if you're just partners sharing.
Yeah, I'm using the word when it's got a very specified meaning. So let's change that and say I own something with my partner. And so we've got an account in which that's going on. That software is suddenly going to become less useful to me.
It is, because most of the software will require a subscription per person to reporting platform.
And there's another scenario in which this is relevant, particularly for those of us that are hosting on platforms like Airbnb and Booking.com, which is, again, let's come back to those service fees. So the fees that we are paying Airbnb, we absolutely need to be declaring them as part of our income and then declaring them as an expense. That's critical. That's the core message, that one of my messages I'm wanting to get across in 2026, and everything I'm doing, that is declarable. But obviously, if I look at my bank account, you can't see what Airbnb fees I've paid there. So that, again, renders this software less useful for those of us in these kind of industries.
There are ways of coding the software so that it will uplift certain income to reflect that, or you can do, an accountant can journal in the commission. So there are adjustments that can be made, but it's not as straightforward. Now, there is one piece of software that is specifically designed for property owners, and it's got the advantage also of being of only needing one subscription, and it will report multiple owners on that one subscription. The more traditional ones like Xero, each different owner would need a subscription. So the property one that I would recommend is called Hammock. I mentioned to you earlier, I've set myself up on it, but right now it only works with people who report on the cash basis, and I'm on the accruals basis. But apparently that's coming in the next few weeks. So hopefully by the time this podcast comes out, that it will be able to cope with the accruals basis.
So that's set up knowing that companies like Airbnb take fees, and so it's got that built within it, ready to go.
Yes, you just put in a percentage of their fee, and it automatically uplifts it by that. It's got a specific category for furnished holiday let owners, and it's got all the it's beautiful. It's got all the costs that you might incur preloaded in it, so you don't even have to add them. There was a welcome pack category in there, and
brilliant.
Which is not, you wouldn't get that in Xero.
No, of course. Yeah,
and you can put the percentage of ownership in, so it's great as soon as they sort out the accruals element. But I'm hopeful that will be very soon.
So I think we've summarised everyone that's included and needs to be going digital, and actually it is going to be quite a lot of people who are sole traders, likely to be you if you're a sole trader and or own property. There's an exclusion, and this is one to accommodate those with additional needs. Tell us about that.
So there are some taxpayers who are in this class called digitally excluded, and these are people maybe because of age or disability that can't comply with these digital reporting requirements. And you can apply to HMRC to have your case considered to be put in this category. I think at the moment they're taking about 30 days to confirm whether or not they'll give you an exemption. And I believe it's about 50% of cases are being upheld and 50% are being rejected.
Okay, thank you. That's really worth knowing. So we've established who's included. We've established the timescales of what we need to get on and do. So let's just, as we near the end here, think about right now, someone's sitting listening to this and they're thinking, I haven't made a start with this yet, or I need to check where I'm up to with this. What should we be doing now to make sure we're compliant?
So number one, check whether it applies to you this year.
And if you've listened to this and you thought, oh, actually, maybe that does, go away, look at the government website and work out if that's you.
Well, have a look at your last tax return that you submitted and see what the numbers were in that.
In fact, that's a motivation to get your last tax return done, isn't it? You've got to do that to know.
No, well, it's the one you've already submitted.
Oh, of course it is. Yeah. No, I'm worried. I'm worried that everyone's going to suddenly in January 2027 go, I haven't done it. I've missed a whole year. Don't say I didn't warn you, folks. I tried.
To check whether you need to do it, then decide if you're going to go for software or for spreadsheets. There isn't one nice, perfect one. There's limitations for everything, but small businesses, I'd say if you're really small, stick with the spreadsheets.
Yeah, especially if you've got a system that works for you already, then yeah.
But make sure you know what bridging software you're going to use and give yourself plenty of time to make sure it's working correctly.
Sorry, I should have asked this earlier. Will certain bridging softwares require you to have done certain things in your spreadsheet, certain layouts and things like that you should kind of be forewarned of?
So I haven't tried them all. Certainly the ones I've used There was one where there was a slight hiccup because I hadn't put it in exactly the right, my cells weren't in the right sort of form.
Yeah.
I could pick
So-
the cell I wanted to I could actually choose which cell I wanted to send to HMRC, but it wouldn't, it rejected it. And it was because I'd used a percentage somewhere, I think probably applying my private use.
So I suppose,
I can't remember, there was a percentage in there.
like with lots of things, worth knowing what you're going to use so that you can just make sure what you're doing is going to feed into that nicely.
If you're using bridging software in particular, well, any software, I would recommend, especially the first time, try and do it as close to after the 5th of July as you possibly can, so that if there are any hiccups transmitting that data, you've got time to get onto the helplines and sort it out.
Yeah. Okay.
They can be very busy. Certainly don't leave it till the 7th of August, because I think literally I had a percentage using it in a formula, not necessarily in the cell that I was trying to transmit, but
I see.
Picked it up and it just kept rejecting it. So it's just little things like that you need to be aware of. If you're using, say, Xero or Hammock, you'll have to connect that to your online tax account to submit that data. So again, don't leave it till the last. Make sure you've got it all set up. You can get all that set up now. Even once you've decided what you're going to use, you can get all the connections set up now.
Yeah, so it's done.
Yeah.
So we've worked out whether it applies to us. We've decided what we're going to do in terms of spreadsheet or software. What else do we need to do now, if anything?
Register with HMRC to be in Making Tax Digital.
Okay. Is that onerous?
No, it should take 10 minutes at the most. Gov.uk website. They ask you all those usual questions: name and date of birth and national insurance number. It takes a few minutes. It's
great.
That's
good news.
Would expect to be asked. Yeah,
that's good news. Okay, brilliant. Helen, thank you so much. Now, as ever, you are fabulous at answering questions, and I'm sure when we share this, you'll be around in the comments to support with things, and you'll often pop into my group and so on, and that's fabulous. Helen is my accountant. She was originally a client as a holiday let owner, getting you set up on Airbnb. We've done lots of this work together, and I've walked the walk here. I think Helen's so brilliant. I've wanted her to be my accountant, and I wouldn't have wanted to go limited with anybody else. Because I rate Helen so highly, I am actually affiliated to her, and if you use the code K5, you will get 5% off ongoing tax work for the first year of working with her. And as I say, cannot praise Helen highly enough. She's just such an expert, and she has a way of explaining something that I have no understanding of to me in a way that eventually I can understand. So I really appreciate that. Helen, thank you so much for being here today. I'm sure there'll be something that will come up later in the year that we'll need to be here to talk about again. But for now, thank you for being here.
Thank you so much for having me, Kay.
All right, talk to you soon.
Next time on the podcast, it's Emma from Perfora, and Emma is my guest talking about disability accessibility in our holiday lets. I find this one really challenging and really thought-provoking, and it's left me with a lot to think about and a lot to take away. I think there's something we can all learn. See you next time.